Alright, hope everyone's doing well. I apologize for not, excuse me, I apologize for not making that many videos recently. I've been caught up with a few other things, and also on top of that, I've been just taking the time to kind of look at some of Al's stuff and kind of think alone in terms of my strategy towards trading. And I'm still doing the same thing. I'm really focusing on swing trading, and to kind of give you an idea, we'll start with today. By the way, if any of you are in the room, someone asked a question about, I don't remember how I worded it, but having trouble staying in on swing trading, and I probably should have worded it a little better, and Al did a good job answering it. My main thing was I'm caught in the middle of, let's say you buy up here, I end up getting out below here, and then this reversal happens, and then, in other words, I buy here, get out below this bar, outside up, so then I have to get long up here, and it doesn't hurt me too much. I mean, I lose 2 points, and then I get back in, which isn't a huge deal. The biggest problem is that, well, I lose 2 points, and instead of buying here and being up 2 points, I lose 2 points. Then, getting out on this, I thought this was a, 3 strong bars down, getting out, and then getting back in. It didn't hurt me, But with that said, I basically broke even down here instead of being above water, and then so kind of things like that. A good example yesterday, getting out below here and getting back in, which didn't hurt me. I'm trying to let me think better to what I'm getting at. Well, okay. So here's kind of what I'm getting at. And on a day like today, when it's a little more hot, it's harder to swing trade because it's obviously a broad channel, which looks more like a trading range. So my biggest issue has been, if I would have bought here and just exited up here, that's, well, from 2059.75 to 2080.75. So it's almost 20 points, which if you can make 20 points in a day, you're going to do great. But it keeps me out from getting in and out and in and out and out. And so one thing I've been kind of looking at, and I may try it for a little bit, is just really focusing on, okay, if I buy here, I'm putting my stop here, and just wait for price to go above. It stops me out. Below here, I look to re-enter. And, once price gets a new high, maybe my stop here, pulls back, doesn't create a new high, so you don't move your stop, pulls back, makes a new high, move your stop down here, maybe here, pulls back, makes a new high, move your stop, pulls back, makes a new high, move your stop. So there's an example I was looking at a minute ago. Wish I could find it. Oh. So yeah, look at this. So basically, what is a trend? Staying in as long as it appears to be a trend. A trend is simply higher lows and higher highs. We all know that. Here is a minor higher low. It's not really a good higher low because look, we had a pullback that led to a higher low, or excuse me, a lower high. So you probably, a lot of bulls may not really see this as a place to move your stop. So here's what I'm looking at. You buy, put your stop down here, get a new high, put your stop down here, pull back, new high, stop down here, and do that all the way up. And, same thing here. Maybe, worst case, probably not a good trade. If you sell, It's still always in long, so it's probably better to get out. But let's say you sell and get stopped out here. Okay. By either this bar or this bar, you can say, okay, gee, it's always in long. I'm going to buy, put my stop down here. We got a pullback. And pull back, new high, move your stop. Pull back a minor, and not really a great high. So let's just say you didn't exit below these. Okay. Got a breakout, bear bar. You really got to be thinking, we might be always in short. So I'm going to exit, just take the loss, exit, and get short. Or sell here. Put your stop up here. So you exit longs, get short, put your stop up here. And you might lose it. You don't really make anything on this, and that's okay. Sell, put your stop up here. And then we pulled back, we made a new low. Move your stop one tick above here. Pulled back, but look where we are. So price went to 58.75 was the high. 58.25 was the pullback. But it didn't stop traders out. See, if you think about a swing trader, they may sell, pulls back, new low. Traders are going to sell very, very aggressively when the closer it gets to this higher low, lower high. Why? First off, they're protecting their stop. Second, think about the risk. If I sell here and risk 3 ticks to make a new low, somewhere down here, great risk reward. So just trust your stop. You get a new low. Maybe you move it up here. And maybe you get out here. Maybe you just hold. Maybe you get out above this bar. You'll make money. Look at a day like today. Look at a day like here. You could buy this close, stop down here, hold, and not get out the whole day. You could buy right here, put your stop down here, new high, move your stop, pull back, new high, move your stop, pull back, new high, move your stop here, new high, pull back, new high, move your stop down here. It's really interesting how well you can do. Another thing that's caught my attention, and I don't know how many of you I'm kind of rambling about the day, so I'll try and review today very quickly, but this is just some kind of overall thoughts. Jesse Livermore, if any of y'all know who that is or was, I would Google him. And he was the type of trader who would basically, he learned to buy aggressively as the probability got higher. So, for example, buy more, buy more, buy more, buy more as it goes up. So the more it went up, the more he was willing to buy because the higher the probability was. So he would buy small, maybe buy small up here and buy more as the probability got higher. So, for instance, buy small here, he'd buy more up here, more and more and more, knowing that the probability is higher. Not really a great example. The better example is this. If you're in the, what's the best way? The truth is, correct me if I'm wrong, please, but there's one way I can think of where you can make the most money trading. It requires the most risk, but it's the most profitable, and that is this. This is today, and this is just an example. I call it I may have spelled Jesse Livermore's name wrong, but I don't even really need that. Anyways, the whole concept is, and Al wants to do this one day, and I hope to do this one day, because the reward is insane. Swing buy, you buy above here, and it's always in long. So you look for every stop entry and you buy. So you buy up here, stop down here, buy up here, stop down here, buy more, stop down here. So let's use one contract. Buy one contract, stop down here. Buy one contract, stop down here, stop down here. Buy another contract, stop down here. Sorry about that. That was Trade Station if you heard that. Buy one contract, stop down here. Buy another, stop down here. Buy above, stop down here. And then you buy here, stop down here. Point being, you never get out. You just keep building your position, building, and then you find the exit right here. And you're probably thinking, But gee, you'd be risking 12 times your normal risk, and you would. And this is something not recommended. I have not done this. I will one day. I'm just kind of really practicing swing trading. But here's to give you an idea. You were to take every stop entry and rely on your stop, moving it below. So by here, 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 above here, above here, above here, above here, above here, above here, here, and here, you get a breakout. So you move your stop down here, here, maybe below this bar. You buy more, stop below here, new breakout, move everything here. And on days like today, you'll make 196.5 points per contract. That's just to give you an idea. It's pretty much $10,000 for a total of 12 contracts. So think about it. It's all kind of theory type stuff, but if you want to make the most money in trading, it's swing trading. You swing and you just hang on the whole way up. That's how you'll make the most. Scalping is very hard, and if you are doing great in scalping, then continue to scalp by all means. I'm not telling you not to. I'm not telling you that you should change your method. What I am saying is, well, if you can get really good at swing trading, and then at some point you're good at adding on to a position as the market's going up, and then adding on every stop entry, it's just do the numbers. It truly is astronomical, A day like, I'll give you one more example, and then that's it. And then we'll talk about today. I think it was this day. Yeah. This was, I think, yesterday, maybe the day before. It was the 16th, so it was Monday. Maybe you buy this close. I don't know. You buy this close, stop below here, and just hold. Or you take any stop. So maybe buy this close, get out below. Buy again here, stop down here. Buy more here, stop down here. Buy anywhere, and just keep moving your stop. New high, move your stop here or here. Pull back, new high, stop down here. Point being, these blue entries, this could theoretically be your first. This could, or this could. And you just keep adding on the whole way up, whole way up, whole way up, whole way up. As long as you don't wipe out, 10%, let's just assume you had a large enough account. If you could do that, you're going to make 133.75 points per contract, and you'd be in a total of around 10 or 12 contracts. So, just imagine if you were trading 20 contracts, you added 20 more, 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 and 20 more, 20 more. Obviously, I know y'all are already saying, but gee, you'd have to have an extraordinary amount of money to do that. And yeah, you would have to have a fairly large account. But just if you could do it, and there are traders who are doing it, and I'm not obviously one of them. I wish I was, but I'm not at this moment. You can make an extraordinary amount. So, just fun things I like to look at. I'm kind of realizing my personality is more towards swing. I'm willing to be patient, and it is, if you can do it right, it is worth it. So, let's look at today. From an always in perspective, I think we're always in long on bar one. You can buy above bar one, stop below, maybe 30% chance you win. And, well, what do? Well, maybe you buy above bar one and just go for 10 points. Nothing wrong with that. Not enough to make anybody think it's always in short. So you buy and you just hold. Maybe you get out here. Maybe you don't. You just stay long, still always in long, never really always in short. You get a breakout. And the way I would do it, I did not as well today. I did it after this. I would buy somewhere in here, just put your stop down here. I know it's a lot of risk, but you can get a lot of reward. And then you just sit through this, hang tight. You get a breakout, so you move your stop here, maybe even here. Pulls back on you. And then you, by the way, just for fun, that's 50%, so that is, yeah, that's roughly the bottom third of this leg up. So anyways, you're long, pulls back, no reason to get out. It still doesn't stop you out below here. Then you get a breakout, pulls back, get a new high, maybe your stop down here, pulls back, new high, exit on the close. Now, realistically, it's a hard thing to do. You could exit below this bar and re-enter. You know, all I would say is if you're struggling, I'll go into more detail in a minute about the day, but if you're struggling with days like today, just go to the basics. Say, okay, it's always in long on bar one, so I'd rather look to buy than sell. I'll just buy above bar one, put my stop below. Maybe you like higher probability. You don't buy. Maybe you buy this close stop down here. You still make plenty. So let's look at that. Here's twice your risk. It's up there. So I don't have a lot to say about today, but I'll give you a few things. Take a look at this close. Why do you think this bar reversed so aggressively? It went down and up and down and just rocketed up. Well, bears sold this close scale, didn't think they could get out break even. They were never able to. So, oops. Well, you're not gonna be able to see that on there. They weren't able to. So that's partially kind of part of what led to it. And then here we got a measured move up. Main thing is look for buys. Buy here, swing stop down here. Buy here, swing stop down here. I'm beginning to realize you can take any of the stop entries first. You can almost take any of them and have high probability if you use the right stop. You buy here, stop down here, maybe here. You hold, maybe you get out, but you don't have to. So I'm going to be discussing more of the swing style approach, and I can just tell you right now. I'll be honest with y'all. Up till here, I was probably 6.5 to 7 points underwater. And reason being, I'd get out, have to get back in, get out, get back in, lose a few ticks. Ended up buying here and getting out below this bar during here accidentally on this, and then had to re-enter. You're doing that enough, 3 or 4 or 5 times, and then next thing you know, you're 7, 8 points underwater. And about towards here, I kind of realized that okay, I'm just gonna start trusting my stop more, and just here, put my stop down here, and I'm just gonna wait to see what happens. And I'll be honest, I actually had even though I was 7.5 points in the hole, I actually ended up with a really good day. I was long through here, kept my stop under here, and got out up here. I'll be honest. So, there's a reason why I'm saying that, and I'm saying that because, well, I don't like doing this, but I will. Okay, so I'm just trying to remember what all I did. And again, I I'm only showing my trades today because I want to explain more what I'm talking about. Buying here and got out below this bar. Well, that's about 3 points lost. Buying here, getting out below here, and then getting out here, you lose, say, a point and a half, but you miss out on this. So now you're getting in worse. Getting out here, I did not mean to get out there actually. That was a mistake. I thought this was a bear bar, so I got back in. Anyways, buying here and it got out here. Finally, I re-entered above here. So you can see you lose 3 points, and then a point and a half. So that's about four points lost, 4.5 points lost, and then you lose again here. It's 5, 6, maybe 7 points in the hole, as opposed to just buying here, stop down here, and just waiting. So I did okay because I was willing to move my stop, but the whole point of that is if I was to just have bought here, put my stop down here, and just hold all through this, well, obviously I could have done a whole lot better. So I'm going to be focusing a lot more on very basic swing trading. And the reason why is it's scalable. I want to do something, to be honest, where you can increase volume very heavily, as everyone does. And I'm really beginning to see it. The easiest way is swing trading. The easiest way by far. You buy here, put your stop down, and you just hold. You buy more once it gets closer. If we think about how computers work, what are they doing? Well, take this for example. Did they buy? Sure, maybe they did. They get stopped out 3 bars down. Maybe they bought, got stopped out. They sell here, stop up here, and they hold. When do they get out? Well, maybe they think, okay, possible major trend reversal. I'm going to, some computers will just sell, pull back, new low, stop 1 tick above. They get stopped out right here during this bar, and that's in part why this bar looks this size. There's other reasons, and then maybe they reversed along here, and it goes up and up and up and up, and then they hold and their stops down here. Well, that's a lot of risk. It is. Or maybe it's here, but then they get 2 strong bear bars, so they think, wait a minute, this isn't good. They sell out of their longs, basically break even if you bought this close or this close, and then they reverse to short with their stop up here. Well, move down, maybe move your stop up here, pull back, new low, stop goes 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 somewhere up here, pull back, new low, stop up here, pull back, new low, stop up here. Well, if you only sold once up here and just held, that's a lot. But think about this. Other traders are short, pull back, new low, stop up here, and you're going to sell very aggressively the closer it gets. Computers will sell all the way up until their stop. So right here, they'll buy this close. They will buy all the way down until they get stopped out. Why? It's the best math. So if any of y'all are interested in swing trading more, that's what I'm going to be talking about. You buy up here, maybe you get out, maybe just buy up here, maybe you get stopped out below here. That's fine. And then you buy again, put your stop down here. Then maybe you say, okay, here's 3 bars down. Maybe you get out right here. You have 3 bars against you. It's probably always on short, so you sell. Stop up here. And you hold. New low, stop up here. Pulls back all the way up to here. But look what happened. 57.50, 57.50, never stopped you out. It came within a tick. Goes back down, move your stop, pulls back all over here. So even though you bought, took a loss, you bought it good, took a loss, if you sold here and held all the way through this, you'd have done, well, really well. 56 to 41, that's 14, 15 points. Same thing with here. Maybe you sell this close, stop up here, pull back, new low, stop up here. Pull back, new low, stop up here. Pulls back, new low, stop up here. Let's say worst case you get out here. Okay, well you still made a profit. Maybe you look to get long up here, and maybe you buy. And then you put your stop down here, and then you get 3 or 4 or 5, 6 bear bars, get out. Maybe you go short, or sell this close, stop up here. Well, not really a lower high. It's just part of the spike down. You get a pullback. Here's what I'm talking about. Pull back, but we didn't get a new low. Look at this low. 73 even. 73 even. So you have to be thinking about the possibility that the stop may need to be up here. We may go a few ticks above here or here and turn down, which we did. So then we make a new low, stop up here, and you would have gotten stopped out. You do pretty well. Look at here even. Not really very big bars. I mean, these bars are almost 5 points, a little bigger than 5 points. So hard to decide what you do. It's this kind of day is not really as simple. Maybe say, okay, maybe sell 3 bars down, stop up here, and then we get 3 or 4 or 5 bars up. Maybe say, okay, that's probably not right. And, I don't know, maybe you buy up here, stop down here. But look, let's just say you did sell and then you reversed along over here, stop down here. Price pulls back, makes a new high, move your stop. You got to wonder about here because it's trading range day, but price pulls back, new high, move your stop. Pulls back, new high, move your stop. You get out right here. Worst case, you could somehow, let's just say price stopped you out down here, you basically break even on that day. Sell this close, sell this stop entry, stop up here maybe. New low, stop up here for sure. Pull back, new low, stop up here. And then, when do you get out? I don't know. But maybe you hold through all of this. And that's